welcome to this week's edition of the Sustainability Dialogues in Saudi Arabia, an initiative by Microsoft to try and help build the roadmap to net zero 2060 in Saudi Arabia, as well as all the other roadmaps that we're all involved with, both individually, as companies, and collectively as societies, to help and reduce the carbon footprint of each one of us and for us as a whole. And in the meantime, take the opportunity to build a green economy, which is clearly both the yin and the yang of this moment and of this opportunity. It gives me great pleasure to welcome our two speakers today. I'm going to kick off with Zoe Knight, who's the group head of the HSB Center of Sustainable Finance and also head of climate change, Middle East, North Africa, and Turkey, HSBC Group. I'm not sure if they're all one title or they're a combination of everything, but ultimately she's the person at HSBC who knows everything about sustainability, I would suspect. Zoe, your opening thoughts on what is our topic this morning, building green finance frameworks to advance sustainability in Saudi Arabia. The money of this big challenge, 125 trillion apparently, to get to net zero by 2050. Your opening thoughts, please.
Thanks, Sean. And just can I say it's an absolute delight to be participating in furthering this agenda in partnership with Microsoft Arabia. So finance is an enabler, and what we need to do is really mobilize capital into those solutions. And of course, the region, but particularly in Saudi Arabia, we have very clear goals that are aligned to greening the economy, not least through the renewable energy infrastructure. And really what investors are looking for in this space is transparency of capital deployment. So what HSBC is doing quite a lot of is working on green finance frameworks and the transition narrative, how we move from our economies today to our economies of the future that are clean and green and solving the climate challenge, in order to provide transparency of how that capital is being deployed. So clearly there's a lot of opportunity in the space, and there's a lot of work to do on building coalitions around these frameworks and providing transparency and looking what the future looks like.
Zoe, just to follow up with you, of course, HSBC, one of the biggest banks in the world, if not the, in terms of its geographic reach at least, which is relevant to the point that we're seeing the challenge of capital in emerging economies. Certainly, there's a lot of capital moving towards the economic opportunity of green finance and the great energy transition in developed economies, wind farms in the North Sea, solar farms in Texas. But in terms of emerging economies, how big a challenge, and are we seeing progress there in bringing capital to the ground in Uganda or Bangladesh?
Yeah, for sure. I mean, there are different trends in different locations, and some of them are due to regulatory frameworks, geopolitics, all of the things that you would normally take into account. But in some cases, we can do better by providing transparency around the products that are issued that investors are looking for. So that might be green bonds through the capital market or green loans through the direct lending that banks do. So what we're trying to do as a global collective is unblock these barriers. Now, one initiative that was launched last year to take account of this, the Glasgow Financial Alliance for Net Zero, launched at COP26, aims to really unblock some of these mobilization barriers. So step one, having a capital market that does have a transparent labeling system around the green factor and talking about what that really looks like. And step two, also thinking about sustainability linked products so that countries can really show how they're moving forward on their transition. So we know that the vast majority of countries have submitted a climate plan to the UN as part of the ongoing climate talks that we have every year. But not many countries have got investment roadmaps that are associated with those plans. So this is really looking at in detail how transition is going to take place through the energy system, through industries, through the service economy, etc. So what we're trying to do is really translate those plans into on the ground investment opportunities and look at what that will take.
Let's welcome Dr. Anthony Berkeley, the head of investments at Future Investment Initiative Institute. Anthony, welcome. Your thoughts on this general theme of framing up green capital?
Sean, thank you. And thank you for this invitation to engage in this timely conversation. I want to acknowledge Microsoft Arabia's role here and also Gulf Intelligence. Zoe and her colleagues at HSBC are one of our closest and most important strategic partners at FII Institute. So it's a real pleasure to be here with you today as well, Zoe. FII Institute is a nonprofit global foundation and think tank. And we're based in Riyadh, where in fact I'm based, although I'm in Dallas, Texas today. And we have an office in Washington, DC. And we host one of the most important global investor conferences annually in Riyadh at the end of October. And so our sixth edition of Future Investment Initiative will be October 25 to 7th. And it'll be another forum for discussing these issues around sustainable finance. So it's an important issue for us, for our partners, and our networks. And the Institute has stepped forward to play a thought leadership role in this space to encourage investors globally to think seriously about ESG investment allocations into emerging markets, as you said right at the upfront. And we have identified an issue that the majority of ESG funds currently do flow into developed markets. ESG investors are more comfortable in investing in developed markets. And as Zoe said, the infrastructure to enable those investments is more visible to those investors and more developed. It's a longer tradition of working in this way. So part of our goal as a nonprofit and a convener is to bring together the pieces, the players of the sustainable finance infrastructure. That includes organizations that can issue products, organizations that can make investment decisions, the market makers, the analysts, the data sources, to bring them together to encourage cooperation and collaboration so we can accelerate this process that's already well underway. The Kingdom has very clear Vision 2030 priorities, commitments in 2050 to net zero by some of its largest players, and then 2060 at the country level. So the movement is there, and our goal is to accelerate the progress and the process. And we see very encouraging signs. So for example, in May, the FII Institute, in partnership with HSBC and other partners, convened on this topic in London. And we were very pleased with the turnout. We had over 300 attendees, 45 plus speakers, tens of thousands of people following online. And it's clear to us that London is a center of sustainable finance, and that if Saudi Arabia wants to advance ever more rapidly along its goals, that we'll need to engage and encourage and work very closely with London and New York and Paris to stitch together this global ecosystem for ESG and really help it fulfill its potential in emerging markets. I think it's fair to say that ESG investing at this point is still largely concentrated in Europe and North America. So there's a lot of work to do globally, and we're one of the groups that's on this issue and pushing it forward. We're not alone. For example, the United Nations Principles of Responsible Investment released, I think, a very important report in April. It didn't get a ton of attention because there's too much going on in April, but they really called everybody out around this issue of a huge funding gap in emerging markets. And so this is the frame and the opportunity, I think, for issuers in Saudi Arabia, for market makers in Saudi Arabia, for investors, for allocators to really up our game. And as Zoe said, take the best of the frameworks and the best practices and make sure that whatever we do, whatever product we release, whatever initiative we engage in, really builds that best thinking into what we do in the Kingdom to make sure that we can be a leader in drawing capital into emerging markets and provide a proof point for the world, not just for Saudi, but for the world. We'll need this financing everywhere around the globe. We need it now. We'll need more of it than we realize. And I think Saudi Arabia can play a leading role here.
Tony, just to follow up on, sorry, Zoe, just a second. Tony, I just wanted to get your view on just at its timing, as they're articulating the importance of moving what is a sort of developed world focus on ESG, investing into emerging economies. In this moment, we're seeing a pushback against ESG investing, or at least the brand seems to be getting a bit of a beating. Hard to open the Financial Times any day of the week now without some kind of slapdown of the ESG model. Your thoughts on what is that and how significant is it?
Yeah, in the U.S. at least, I'm not paying as much attention globally, but in the U.S. at least, ESG, as have so many themes and topics in U.S. life, has become politicized. And so I think that we're going to have to anticipate a back and a forth. Political candidates, the pundits, the talk shows will kick this one around now. And I think we weren't used to it in the ESG community because a couple of years ago, ESG was a fast growing, but not necessarily a hugely prominent part of global finance, but it is a prominent part of global finance now. So the controversy is not going to go away, at least in markets like the United States. And I think for those of us who can see the long term here, which I think is the raison d'etre of an ESG investor, we'll just have to stay the course. It's up to us to pick good products to invest in and make sure our capital is doing what we say it should and what the managers we invest with and the assets we invest in say it will. That's our responsibility as investors. We'll have to continue with that. But yes, it is now a topic du jour that won't go away. Look, in some ways, let's be clear, it's a sign of success. It's an unfortunate sign of success. And that's what happens in our societies. We like to kick things around in London and New York and Paris, and that will just continue. I think there's probably an opportunity here to strengthen and improve and maybe correct some things that needed correcting. So it's not all bad, but fundamentally, it's just a sign of the prominence now of this style of investing, and it's going to get this kind of attention. I don't know, Zoe, what's your thoughts on this? I would love to hear
Zoe, you jump right in, Zoe.
Yeah.
I wanted to follow up.
I was just exactly going to build on that point, actually, and echo your points, Tony, around the coalition building and the emphasis around this topic and how we're strengthening frameworks, and it's really important to do that. But what I also wanted to say is, if you think back to the origins of ESG, driven by the UN principles for responsible investment, as you were talking about, it was very much an emphasis on looking at how companies managed their environmental, social, and governance responsibilities. If you fast forward to today, it's much more about the outside in, how climate as a driver is really shaping end markets, it's shaping trade flows, it's really shaping all sectors across the economy. And one of the issues that the financial sector is really looking at very closely indeed is how those transition pathways play out in different markets. And this taps into this emerging market point, right? Because each economy is coming from a different starting point in terms of its competitive advantage in resources, its capacity, its financial firepower to be able to make changes, the willingness of the population to want to get involved on the demand side changes that are going to be needed. And so we're really talking about a global economic thinking shift in the context of energy markets that are in turmoil at the moment. So investors have got a really tricky job to navigate on the ESG agenda, and building these coalitions and making sure that they are working in harmony with each other on these topics is really important. And that's why events like the FII, I'd forgotten that it was already the 6th year, Tony, that we've been working on the FII in Riyadh event. But that's why it's so important that we all come together to talk about this piece. And actually, it is important that we're held to account that ESG does make sense and it is delivering the right outcomes that we want to see. So it's going to be tricky going forward.
On that point of doing what it says on the tin, so to speak, we have experience. I mean, I'm just sort of looking again on that thesis of moving into the emerging economies, that we've had the experience of Islamic finance, for example, in 10 plus years ago, a new model of finance with its own sort of ethical framework around it, and yet an ROI required. I'm wondering in that regard, from the positioning of green finance in the emerging economies, how should it be seen as different to regular capital, or should it be seen, or how is that model comparison? Because I know with Islamic finance and during that era, even though a lot of Islamic countries, people still struggled with standardization and regulatory frameworks.
So I'm not quite as familiar with Islamic frameworks because I've only just moved to the UAE. But what I can say about green frameworks is that it is all about transparency and high integrity, that the capital that is being provided is being allocated to the activities that were put forward for the use case in demanding the capital. So I think with green, it's not so much that you come up with new products as such in terms of a bond's a bond and a loan's a loan. It's more the transparency and thinking through what that specific capital is going to be used for. And that's really important in the monitoring progress on the climate agenda in particular. So we know that huge volumes of capital are needed to transition the energy system, but investors want to be clear where that capital is on the green journey, as it were. Is it pure green in terms of solar or wind, or is it part of the transition of getting from a high fossil fuel base to a lower fossil fuel base? And it's transparency around that they're looking for.
Tony, just fiddling on that point, the COP27 this year is in Egypt. One of their primary sort of focus, at least from an Egypt host point of view, is trying to break the back of this capital availability to emerging economies. And one of the challenges there is de-risking the investment structure into the emerging. I'm wondering some of your thoughts on what those risks look like and what could be done to de-risk them, and where is the burden on de-risking?
It's a great question. It's a tough question too, Sean. There's a lot of folds to it. I think to start with, though, ESG investing is a risk-off framework. It's not a risk-taking framework. It doesn't promote risk. The tools and the frameworks and the mentality of ESG investors is actually to do everything they can to reduce risks. So I think we have to start with really understanding the kind of core DNA of what ESG is. What ESG says to an investor is you need to focus on things beyond the balance sheet, beyond the cash flows, and beyond some of the more narrow business considerations. Why? Because they're risks, and you need to understand them. You need to avoid projects that have poor governance, which is a risk, or poor use of resources, which is a risk. And you need to invest in projects that have really good stewardship at all these levels. So ESG, the mindset of ESG investors is not to take on risks. It's to manage everything they can against risk and to take a more of a holistic framework. And so what ESG investors typically invest in are not risky assets. They're large cap global corporates. These are the safest public equities you can invest in, and that's where the bulk of ESG investing is, in New York and London and Paris. In finance, they're investing in institutional grade bonds that are released by these corporates, or released by sovereigns, or released by government agencies, or multilateral.
May not be available in the emerging economies, right? It's a difference to the blue chip.
But let's get there. We can get there, but we have to start in the right point. So that's what an ESG investment framework has traditionally been. It's been different from another field, an emerging field called impact investing. Impact investing is where investors took on additional risk because they wanted to see impacts, and they did it primarily through private markets. So investing in a private company, loaning to an organization privately. That was traditionally what impact investors done. And as Zoe rightly said, there's been a bit of a coming together of these two mindsets. It's not yet happened, but we can kind of see it happening, where ESG investors will now become a little more focused on what actually happens with their capital. So they want to see some positive impacts. And impact investors, I think, have already gotten very clear that they need to take a comprehensive ESG-based approach to their investment decisions. So these two fields are coming together as we speak, but it's work that's happening now, and it's not really going to come to fruition, I think, into the next 2, 3, 4, 5 years. And this is what positions emerging markets so well. I think the argument that the volume of ESG capital that's flowed into, large cap corporates traded on the NASDAQ or the New York Stock Exchange is going to fundamentally change the world. It's hard to believe that, right? You're kind of like, well, these are sort of normal investments. They just happen to now be done with an ESG thought process. But I think when you shift then into Saudi Arabia, or you shift into Egypt, or you shift into Brazil or India or China or any other more emerging market, you can see how this kind of capital, it's new capital, it's capital that brings a certain mindset, accountability to the corporates and the issuers. And you can see how that will be powerful and important in these markets. So I think at that point is where we are today. And then you're right to say, so how do we call this? How do we call this activity more energetically, larger numbers into these geographies? And again, I would first start by saying the ESG side of this, the sustainable finance side of it, is not seeking risk. So for example, if I invest in a proven renewable energy technology like solar, there are ways to structure these projects which have the risk that any financial investment has. And, you know, your coupon, your interest rate compensates you for that, we hope. But they're not highly risky. The technology is proven, the pricing is global, the operators exist. You can get offtake agreements from large utilities and other large users of energy that de-risk you into the future. And so there are ways to build these projects that will appeal to this typical risk-off ESG mindset. I would say the main barrier isn't risk in that sense, although I want to hear what Zoe says. She's more of a deeper expert in this area than I am. But I would say it's literally at the level of lack of familiarity, lack of communication, lack of awareness. I think there may be some country level risk, stereotypes and assumptions in developed market investors that get in their way. And I think these are the things that we have to tease out and then really bring people together, as Zoe said, really get the pieces talking with one another. I think what we'll find is that there are a lot of really attractive investments, or soon will be, in these markets, in the UAE and Saudi and Egypt. And it's really going to be on the responsibility of the investment community to up their game so that they can really appreciate them, analyze them properly, and begin to flow the capital in alignment with their strategies. But I wouldn't view it as fundamentally a question of risk. From where I sit, I wouldn't see it as fundamentally about risk. I would say it more about market making and bringing together the pieces of the puzzle and making them visible and creating some trust and some alignment between the investing group and the group that's offering the investments.
So we jump in on that and also speak to, I mean, these markets, these economies, you know, you think of the Gulf economies, Saudi Arabia, they haven't gone through a long window of time where they've been sort of exposed to sort of credit risk, credit ratings, the debt markets, which are all sorts of sort of institutional structures that prepare you for accountability and transparency. And, you know, they're new to this space. And now the ESG coming on top of that, or at the same time nearly, that they are going to, you know, preparing or are just prepared for the debt markets. I'm wondering how those two work together. Are they complementary? Is it overwhelming? How do you see those two things?
Yeah, so I will get to that, and responding very quickly to Tony's point on risk and how it's going to play out in emerging markets as well. One point to raise there is investors are really thinking about the just transition for emerging countries. And so that, in terms of structuring finance vehicles to capture this just piece, is a really important point. To your question about Saudi, UAE, etc., and debt markets, true, but what they can benefit from is innovation in financing structures and technology enablement, and a really high talent pool of finance professionals that can really sort of fast forward the thinking. We know that innovation is happening at a rate of knots in all different kinds of sectors of the economy, and finance is no exception, right? So, you know, there's transparency in other markets about how countries are doing things. And in one way, this is about sort of having a look at other markets, taking what works really well in those markets and maybe leaving what doesn't work quite so well in other markets, and coming up with the best of the best almost. So, it's kind of, being in
it's kind of an interesting opportunity to sort of, in a hardware or an infrastructure world, you'd say you can leapfrog generations of infrastructure because you haven't been burdened by what was before. And in this, because ESG now, as we know, is coming very firmly into credit rating architecture in developed economies, and in the emerging, they could bring the two together at one moment.
That's exactly right, and that's the optimum outcome, right? It's that there's a fast forward approach and a leapfrog situation where you get a full integration of ESG factors, both from how corporates are managing their own ESG risk factors, in terms of operational aspect and processes, but also how they're anticipating global trade flows and macroeconomic situations that are going to play out in an ESG context. And this is where, you know, COP27 in Egypt is going to push the finance agenda, because of course the finance agenda is critical for both reducing emissions but also building up resilience to the consequences of warmer temperatures. And then COP28, looking at the global stock take of emissions control, will also have a finance element to it as well. So there's a lot for us all to be working on.
Tony, just to sort of move into closing comments about Saudi Arabia in particular, where Saudi Arabia's journey is vis-a-vis the economic opportunity of the green economy, of the ESG embedding into the green economy and the journey to 2030. It seems at times there's so many headlines, so many announcements, it's hard to sort of identify what the realities of specific economic opportunities are. Where do you see, obviously you're in the engine room there of the FII, where are the real sort of on the ground progress in this space?
It's a great question, and you know, my view is my view, so I'll offer it. But I think it's one that Zoe and others would want to weigh in too. I think when you're outside of Saudi Arabia and paying attention to the kingdom, what I hear from my colleagues and friends is just a sense of excitement. The giga projects have landed for people mentally. They understand there's big things going on, whether it's NEOM or a specific hydrogen project or sustainable tourism or a new financial offering from the sovereign. They hear it and they see it, and it's coming at enough of a rhythm now where there's a sense globally that the Saudi Arabian market is exciting. There's big projects happening. It's a place where you can actually make things happen. And that's not characteristically how people will think of every market anywhere. So that's very positive. In terms of exactly where, I would say that the kingdom has done a very good job of promoting its Vision 2030 agenda through these branded projects like NEOM. And that's where I see a lot of investor interest. The one thing I guess that I'll wish for, and this is not surprising given that I work at an organization that hosts an investor conference, is we need more people to come into the region. Please go to Dubai, but don't stop there and go home. Come to Riyadh. What we find is that when investors and business people and entrepreneurs and innovators actually come and experience Riyadh, experience Jeddah, experience the kingdom, it really opens up hearts and minds for them. And they can then attach a reality to the headlines that they're seeing that are exciting them. So that would be my main push, is let's get people to visit. The tourism infrastructure is being built up rapidly. Have the critical conversations they need to develop trust and to really see opportunities that meet their strategies and their priorities. And I think at that point, it'll really open up and things will move very rapidly. I see that happening around me, but I think we can 10x it, right? And that's what I hope will begin to happen if I gets in October.
It feels like it's been 10x'd all the time. But a friend of mine who is a yoga guru, and she led with a group of other yogi leaders, 500 people on a 5-day retreat in Ula doing yoga amongst the Mesopotamian room. I mean, just phenomenal stuff that as somebody's covered the kingdom for a few years, that just is Pluto and Mars kind of transformation. Zoe, your closing thoughts again on this coming to the ground in Saudi. Clearly, there's lots of capital in Saudi. Doesn't strike me that capital is what they're short of. Where does that obvious availability of capital meet the opportunity?
Yeah, so again, echoing Tony, you know, I visited Saudi for FII 2019, which was a true eye-opening experience. And it really is the case that Vision 2030 is absolutely mission critical for providing that longevity to potential investors. But as you rightly point out, the capital question isn't the same as it is in some other regions, for example. But what is particularly strong about the region is this long-term thinking and this very transparent articulation of what that vision is in terms of diversifying the economy and looking at the likes of giga projects and mega activities, similarly to the likes of NEOM. So, you know, the opportunity is there, the focus is there. It's just it's now about investors getting involved and taking the region very seriously indeed.
Very seriously indeed, and especially when you in some ways the virgin territory as such, the opportunity to make such big leaps forward, wherein the developed economies, the developed societies, obviously there's all sorts of architecture. You can't, you know, build a wind farm in the middle of a busy high street, but in a virgin space, there's so many opportunities that can move forward that with decisive decision making that is really a unique opportunity in certainly in the Gulf and elsewhere. But this is only the beginning of our conversation together, and next time you guys will have to argue a little bit. No more of this echoing each other. But we do really appreciate your deep thoughts and your deep analysis and understanding of this subject. So Zoe Knight of HSBC, thank you so much, and Dr. Anthony Berkeley of FAII, thank you so much for participating in the Sustainability Dialogues in Saudi Arabia, a podcast series looking at the journey to 2030 and beyond to net zero 2060. Thank you very much.